As the crisis goes on, do you plan to give more? And can you give me perspective of how you see that long-term play out?
Well, thanks, Alex. It's great to be on. What I'd say is that it's very important to support all of our communities. Blackstone happens to be headquartered in New York, so we're doing a lot there. 15 million is really sort of a tip of an iceberg for us. We have our portfolio companies doing all kinds of things. We're bringing doctors up from the South to work in New York. We're giving out apartments to first responders. We're in the UK, for example, we have a facility very much like the Javits Center in New York, in Birmingham, that we've given to the government to convert into a hospital. So I think that one of the reasons I came on today is to let people know that we think at Blackstone, I think personally, that it's extremely important for each of us in our respective communities to really help our hospitals, to help our governments, to help the first responders. People like ourselves, we're not on the firing line. We're behind the lines being protected by doctors and nurses and EMS people, and we have to do things for them, provide meals and places to live and other types of extraordinary things.
So, Steve, I appreciate that. Thank you very much for that. And you do have a good perspective in terms of what's needed, how to move around resources through all of Blackstone's channels. So to that, I wanted to get your take on how business is. How are the companies that you're invested in or have taken over, how are they doing right now?
Well, we have an extraordinary thing going on. This is the first time that I know of historically where we've basically asked businesses to suspend their activities pretty much. There are some companies that are still functioning, but most places where you leave your place of business, they don't function as well. And we're basically creating, sort of a huge disruption in the business community. We have a GDP in the United States, gross national product, of somewhere around 21 trillion, and we're probably going to miss 5 trillion of it. This is massive, and it washes throughout society, whether it's governments that will lose tax revenue, the inability to pay people and provide services, and this is happening almost in a mandated way. Fortunately, it's going to be temporary, but it's putting stress on every business organization. Doesn't matter, whether it's Walt Disney or Macy's, and all are looking to find more ways of dealing with their current debt loads, paying their people, trying to keep people on, and it's going to result in a lot of disruption and unemployment, as you see. Fortunately, it's going to be temporary because the government has stepped in a really huge way, starting out with roughly $2 trillion of stimulus going to people. So if they're unemployed, they can have higher incomes than they ever would have expected in an unemployed situation. Loans going out to companies, encouraging them to hire people and forgiving those loans for smaller companies if they do. The government has also done a remarkable job with the Federal Reserve, where they're providing liquidity, and they're going to multiply that to $2 trillion with more loans, and there'll be more stimulus after this. I anticipate another trillion to $1.5 trillion. And what this is meant to do is bridge this giant economy here in the United States, the largest in the world, to get to the point where we can all go back to work physically again. And so all companies are under some strain unless they're providing food or doing certain other unique services.
Steve, if you could just speak up for me a little bit. Sorry, I'm having a hard time hearing today with my equipment. That would be super helpful. I wanted to pivot off of that in terms of what some companies are doing. There seems to have been a push by some private equity firms to get access to some of that bailout money for small businesses. Are you on the camp that says, yeah, our businesses really need that support despite the fact that we're private equity?
Well, I think, Alex, there are a few different levels of these programs. I don't really know what the criteria for any of those programs are going to be. The programs for the larger companies, which are going to run through the Fed with a lot of leverage, and then the smaller companies. And it's up to the government to basically lay out the terms. We're not lobbying the government, for loans for small companies. If they want us to do that and make that available, we'll look at some things. But basically, we assume that for the most part, we've got to solve our own problems.
So based on that, sort of solving own problems and sort of where we're seeing the pricing pressure has really been in, say, leveraged loans, CLOs, mortgage-backed non-agency mortgage-backed securities. Steve, can you give me a sense as to where you're finding value? Are you going to swoop in and buy a whole lot of leveraged loans right now or a whole lot of non-agency mortgage-backed securities?
Alex, that is a great question because right now, I think, the biggest value isn't necessarily buying new companies. It's really, as they say, on the screens. And there's a lot of displacement going on. There was, a week and a half ago, panic selling in the mortgage area. A lot of securities have dropped significantly in value. And if you can figure out when somebody's going to repay principal and interest when due, I think there are some very significant investments that can be made, and we're looking at all those things. At Blackstone, we have $150 billion uninvested that we can put into the markets. We're looking aggressively at doing that in all of our businesses. In some areas, you can be too early, but you also, in other areas, that don't want to be too late. So you've correctly identified where the action is today, and I think some of those people will look back and say, geez, that looks so easy, and we think it could be easy in certain of those areas.
So in the meantime, though, you're still obviously huge into real estate. Are you going to let off any of your renters during this time? We've heard some landlords starting to do that, say in Brooklyn. Are you doing that for your tenants?
Yeah, what we're doing with our tenants is if people can show us that they've been displaced or under financial duress as a result of the coronavirus, we'll obviously make some kind of accommodation, for that. The whole country is going to be disrupted for the next few months, and then we'll get back to doing business. Our real estate business is in quite good shape, actually, and that's because we've concentrated in warehouses and office buildings as well as apartments, and we've avoided development almost in its entirety, owning malls where there are a lot of issues with closed retailers, and we have a very low percentage in hotels. So real estate for us remains a really excellent asset class.
And then last question to you, Steve. We're talking about the distressed areas right now that you're looking to get into, but not yet. What about junk bonds? Do you think the Fed needs to come in and buy junk bonds?
that's an interesting question, and I actually leave that to the Fed. They typically have purchased higher rated securities, and even in the new TALF program at the Fed, convincing them to go down from AAAs to full investment grade of triple Bs is a big stretch. Junk bonds are a little out of their normal range. I think they will look at that with some skepticism, but also within the context of creating liquid markets. And one area they're going to have to do that with are, I think, mortgage securities with CMBS at the AAA level and going down a bit, and they'll find their way. I think junk bonds actually will be low on their list.